Hello Market Club members and traders everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the 30th of January. The first month of the new year is over. And the big news today has to be Amazon, which gave us a buy signal. You can see that at 341.26. The market's currently trading at 353.78. This market, in our opinion, is headed towards the $400 level. And this is where we're targeting. Our target zone is going to be 395 to 400. And how we come to that is the double bottom right here, the pivot point. And if we measure from, let's say, 290 up to 340, it's $50. That gives you 390, and there's a little bit of change underneath. So I think we're probably looking at these numbers right here. And I think that's a good target zone for this market. And again, Amazon finally scored some profits. Not a lot, but nonetheless, it's really hasn't made any money for the year if you look at the last 12 months, but it has made a change, and it is building more and more subscribers. So Amazon bullish, plus 100 is the score. We're going higher. Next market, a little bit different there with Google. We are a couple of things to look at with Google. One, we are over the 50 line, which is a positive sign right here on the RSI. However, the monthly, which is the important one for the trend, has been negative for $560. We're currently trading at $533, and we do have some resistance right here. It seems like advertising may be slipping away from Google and going to something like Facebook, which is a very, very vertical protocol. It's a very vertical advertising niche for advertisers, whereas Google tends to be more of a scatter shot than a vertical site. So let's see what happens there, but nonetheless, Google is in a trading range like a box. You can see the box right here. We need to get out of this box if this is going to go any changes in this stock. Plus 70 means really it's a trading range, and you should be on the sidelines right now in this stock. This is the S&P 500, and you can see I'm going to go to something I like to do at the end of the month. Every month is go to the monthly charts, and you can see this is the second month we've been down negatively. Now, this is the first month of the new year, and what the old adage is, if the market closes down for the month, it means that the year should be either lower or flat on the S&P 500. So we'll see what happens, but right now we have a minus 60 indicating a trading range, and it has been very overbought on the monthly, so we could easily see it come down to the 50 line right here on the RSI. Again, this is a negative month for this index. Pretty much the same thing on the Dow. This is a monthly chart. You can see we have a classic Harami cross here, closing down here. This is a top in the Dow, no question about it in my mind, and we'll see this market come down further. But again, it's the first month of the new year, negative, and indicates either a flat year or a lower year in the Dow. Much the same with the Nasdaq, not quite as much, but nonetheless it is down for the month. Unless it's a miraculous close here, it's going to close down for the month. So same picture there. But it's a little bit more friendly, I should say, than the other S&P 500 or the Dow. We are plus 85. Trends are up. So let's see what happens with this particular index compared to the Dow and the S&P 500. Big move in the gold. Gold is very positive. This is a monthly chart on gold. You can see this is going to be the highest close, monthly close in gold in 1, 2, 3, 4, 5 months. We're still looking for this market to go to 1,345 level, which is about here, just around this level, and that sort of ties us into these previous highs right here. So I think, generally speaking, we've had a pullback to the 1250 area. Now it's coming back up. It looks like it wants to go higher. So let's see how that plays out. The dollar index has had a march of incredible duration. This is the 1, 2, 3, 4, 5, 6, 7 months. I think this is going to be the top, and I'll tell you the reason why I say that, because the candlestick charts, usually things happen in sevens. If you get a 7 run, it usually means a reversal is coming pretty soon. So I'd watch this very carefully. I would doubt seriously we're going to see the dollar close higher in February than we are today. So let's see how that plays out, but we need to have some real strong indication, either with a trade triangles or something, indicating that we're making the turn. Same thing with the crude oil. Look at the crude oil. 1, 2, 3, 4, 5, 6, 7 months it's been down. Now, trends persist, but 7-month trends tend to have some little pop, and I think we'll see a pop probably coming in February in crude oil. Generally speaking, the trend certainly is there. And if you look at, if we go to a weekly, you can see we're actually, just on the weekly, we're actually higher for the week in crude oil, which is hard to believe. And we may want to just watch this very carefully for some little bounce, perhaps up to 60, 55, who knows, but nonetheless, nothing goes down forever and nothing goes up forever. Always remember that when you're trading. So we're going to be taking a look at some weekend trades, and a couple of weekend trades I want to share with you that I think could be very interesting. So we go to our smart scan, and we want to say 52-week highs. You know how this works by now. If you've watched these videos, you know we want to look and own stocks that are making 52-week highs on a Friday and sell them out on Tuesday. So we're going to view it as bar charts. We have an equity. You can view obviously different markets, futures, Forex, mutual funds, but we're just going to look at equities as bar charts. The last price you want to see greater than $50. So let's go there. So that'll cut it down from 415, and we want to see average volume 2 million or more. So we're looking for stocks that are greater than $50 in value and have more than 2 million shares traded every day, and we're just going to look on the U.S. exchanges. If you're in Canada or Australia, you can look at your own exchanges and see what's there. So let's scan right now. So we filtered 415 down to 13 potential trade. Ingersoll Rand, that looks really nice for the weekend. It's a 52-week high. Biogen, same thing there. There's two stocks right there. We both like those for a weekend trade. I want to say the iShares, I want to stay away from those. I don't want to trade those. Vanguard, I'd stay away from that. Apple, if we close over 120, I'd like to be long Apple for the weekend trade if you want to do that. So there you have it. Some nice trades for the potential weekend trades. I would go with the Biogen, Ingersoll Rand, and Apple. They're the ones I'd choose for the weekend. Only if Apple closes a new high ground. That's the key. Hey, I'm Adam Hewison. It's the end of January. We've had a good month, made a lot of money in crude oil, and we are going to have a great year together. So thanks for watching. I'll be back on Monday.